Hello, everybody. I'm Claudio Cungi. I'm head of product of Strands, and today we're going to talk about Strands as a service and business finance manager. So, why is business finance manager so important, both for banks and for SMEs? Well, finance easy for everybody is a must in our era. Furthermore, COVID-19 directly affects business continuity as business operations reduce, supply chains dry up, and demand plunges. So financial institutions have the great challenge to make all of this simple to SMEs. How? Well, especially through digital channels, giving the chance to easily monitor cash flow, payments, invoicing, and showing easy to understand projections. So you will be asking yourself, why do you need a platform to do all of this? Well, the answer is to leverage as much as possible plug and play consistent solution based on top of the pops fintech technology. So to let you as financial player focus on business rather than on implementation process. So why Strands? Well, Strands as fintechs draws on its more than 15 years of experience on big data, machine learning, and artificial intelligence, developing highly personalized digital money management solution to empower people better managing their lives and businesses. Furthermore, Strands was recently acquired by CRIF, an Italian multinational data-driven company that enable us as Strands, thanks to a private cloud, to create a full managed SaaS solution with white label front end. I'm going to show you and jump into the demo. So what we're going to see is something that, by the way, has already been chosen and adopted by tier one banks in Europe, in Italy especially, like Banco BPM. So let me now act as Claudio, a 35 years manufacturing SME that is about to face a negative trends in its revenues that will likely affect his balance. I'm accessing my online banking and I see that I actually have already aggregated all my banking accounts. So both Millennium Bank and Royal Bank. And damn, I see that actually my balance is going low, and in the next 3 days, I'm expecting a liquidity risk, which is, by the way, stated by my insights. Yeah, actually, the liquidity risk is due to an upcoming recurring payment. Well, actually, I don't want to either create a budget or anything else right now. I want to get something more out of this. So let me go and check transactions. Okay, so yeah, actually incomes are basically remaining stable also till the end of the month, while expensing are more than doubling. So this is why I actually saw my balance is about to get low. So I see that it's because of wages and salary I still need to pay. It's about 4,500 euro actually. Well, I mean, I think what I could do is first checking my invoices, see if I can if I have some invoices pending where I can get money from. So actually I see that there is a negative trend that was in April and May. Perhaps it was due to the lockdown. And I see that this trend is repeating, perhaps due to the same issue we're experiencing right now. So moving to the overdue invoices, moreover, I see that in November, there are already 13 invoices overdue. So let me check if there is something I can do, like, okay, so FinTech One actually has one invoice which is overdue. So perhaps what I can do right now is just to call this guy and ask him for paying my invoices. Otherwise, what I could better do is calling my bank and ask for a credit line and or get invoice discounting to get some cash without accessing in the end a credit line. Furthermore, I see that watching my top 5 clients and the overall exposure, I see that actually FinTech One is my biggest client. So perhaps the exposure I have towards this client gives me more than a reason to call my client, get in touch with him, and understand if there's something going on with his business as usual. So to understand if I might experience further issues in the future. So let me strike back in my real role. So what did we see in this journey? The first thing we saw is we saw aggregated cash flow and balances. and projections. These were enabled by a series of things. The first one is we leverage on categorization that enables, in the end, precise projections and insights. So applying also AI principles, we are able to trigger to the customers things that are likely being important for him before they happen. The other big thing we saw, of course, is the white label interface. This is a real interface. This is our interface we offer in the as a service package. So to speed up in the end the time to market of the initiative if applied by a customer. The other thing we saw is invoicing reconciliation. So we matched invoices with transactions coming from our current account to see what's the status of our payments. So what in the end we saw is, there's one more thing which perhaps you did not notice, is the account aggregation. So especially in Europe, thanks to PSD2, we are able to aggregate multiple banking accounts and aggregate them into one unique place. So to give the SME an aggregated overview over its finances. In the end, what we saw, all of these messy things realized a very simple use case. What I showed you is something very simple, but very effective. With few APIs, we can construct this kind of journey. So you will be likely asking yourself, so why BFM as a service in the end? Well, because thanks to as a service, the business owner who is going to provide this service can focus on the creation of new journeys, leveraging the bank capabilities, our platform, and eventually third parties services such as invoicing provider or other kind of services. The IT owner on the other side can focus on satisfying more the business needs of the business owner more than maintaining and implementing this infrastructure. So in the end, which are the key takeaways that we got from this presentation? So as a service is BFM is first of all cost effective. So we're saying that we are not requiring elevated IT infrastructure for sizing, hosting of this new infrastructure. So we will also experience lower running costs associated to the maintenance of the infrastructure. Time to market. We can be very aggressive in creating these new use cases. So the effect is that you will be likely be able to launch much faster products on the market. Third-party integration. We just said that leveraging on an open platform makes easier connection also to third-party services thanks to APIs. So APIs technology enable us to be much more effective in third-party services integration. In the end, the last thing is the scalability. Always thanks to API, the idea is to let you integrate, if you want, just a single service, the features you really need, so you can focus on building these journeys. On the other hand, you will still benefit of us maintaining and evolving the platform. So once new features are going to be released, you will be likely to adopt them by integrating these new features. So in the end, you will benefit from our work of constantly improving this platform. So in the end, this next steps. So why don't you just join us in the Q&A session, coming and asking us questions, any kind of curiosity, just like, for instance, what about the localization? What about the coverage of your country, of countries covered by your platform? Journeys, features, performances, any kind of questions. Also, potential partnership. I will be very glad to discuss with you any kind of curiosity. Many thanks for joining this session. Hope it was useful and hope to see you later. Bye.